For me, the important point was that the truth is there, the facts are there, and at least mentally, I have moved on.
I mean, your case is probably studied in universities, eh? Because people want to know how they're paid. You know, I think 68 million without never starting a job, but also to try and understand what labor laws and everything like that works. Do you think it's changed the way we look at banking laws and banking?
I don't know if it has changed. What I know is that we shouldn't forget that banking is a highly regulated industry. As a result of that, senior jobs have a very large component of deferral in their compensation. In the UK, it's 7 years. And more than 50%, if not 60% in certain cases, of your compensation is deferred over 7 years. If you do the math, that means that at every point in time, you're going to have between 3-4x of your compensation deferred. And that is indexed to the share price of the bank where you are. And if it goes up, those 3-4x becomes even more. The difficulty is when you change organizations, what do? You either have the new organization that assumes that deferral, or you don't move. Because in effect, that deferral is your entire savings. So I do think that although these are large numbers, they need to be put in context of how they got there. Usually, in most cases, in all cases, the organization who hires assumes that liability or deferral. So that number is that liability and deferral, is plus a few other things that occurred because of the case, but that is what it is.
Was it an emotional roller coaster? Is it something that you've put behind, or is it something that you don't think about?
Well, at the beginning, it was obviously an emotional roller coaster. I think from a family standpoint, it was quite impactful, and I think personally, given the esteem I had for that bank, it was quite impactful. I think the important point was once I went through the preparation of the case, I detached and I left other people deal with it, and I was quite fortunate that those people were excellent. And then I trusted the process. A lot of people told me not to trust the process, but I did, and it ended up being worthwhile.
Andrea, talk to me a little bit about your working from home policy. So do you think COVID has changed everything? Is it problematic for a bank to let people work from home?
Let's say that what COVID has done, both from the standpoint of clients and from the standpoint of employees, is more remote, more agile, more flexible. I think that is not a bad thing. I think it has taken away FaceTime. To a certain extent, I believe strongly that being at work is important. That's how you establish the culture. That's how you train people. That's how teams can interact with each other and brainstorm and come up with a good idea. On the other hand, and we had started to do something similar at UBS at the time, you need to give people the flexibility to organize their lives, and you cannot say it's 9 to 5 or it's whatever it is, and that is it. So if you allow that flexibility for people to organize their lives, and if they need to take a Friday morning, and then see the soccer match of their children, and then work longer on the Friday evening, that's their choice. But I don't think you can replace human interaction, brainstorming, teamwork. If you look at the agile way of developing our new initiatives around IT, they come from representatives from business, technology, compliance, risk, all being in one room. And instead of saying you do pieces, how do we resolve the mortgage product? You can do that in the office. You can't do that remote.
Talk to me about attracting talent. So do you worry about some of the bright young minds going to JP Morgan, Goldman Sachs because they pay more? Or do you worry about them going to crypto or Google because it's exciting?
Well, I think what I have found is that the bright minds are as attracted by money as they are, and probably more, by what's the vision, what's the challenge, what do I learn? Is this company doing things that I am proud of? Do they care for the environment? Do they care for the communities? Will I be followed in my career and develop, which is why we just launched the UniCredit University. These things, especially in the early years, take quite a lot of space in their decision. As they move through, and they come in and they move through, then what takes place is how do you treat them? How do you track their career, manage their career? Do you give them opportunity? That's why I think we're very fortunate at UniCredit. I can have a young person from Bosnia who starts in the leading bank in Bosnia, does a tour into Austria, Italy, Germany, Serbia, and then with a skill set that has been refined, goes back and leads the bank in Bosnia. Not many groups can do that. And I think that's one of the attractions that we have.
What do you like most about being chief executive?
Trying to make a difference. I have been told by many people that, no, this cannot be done, or this is difficult. This is a little bit my chance to try and do what I think it's right. What I think it's right is usually I get it from talking to people who, and if I can make a difference to UniCredit and to the 80,000 people that are there and look back and say, yeah, I helped move it from here to here, and I helped establish what are our principles, what we stand for, I think that will be a win.
If the Credit Suisse chief executive job came out, would you be up for it?
I love UniCredit too much.
Andrea, thank you so much.
Thank you, Francine.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Inflation is a terrible thing. Inflation you could tolerate.
You can trade anything as a trend fall.
When you think about Bitcoin, I don't think it's a currency. I think it's a commodity.
Today, we're in an everything bubble.
I'm Eric Schatzker, and welcome to Bloomberg's Front Row. Today I'm talking to Gene Hines, the CEO of Wellington Management. Boston-based Wellington is one of the world's largest asset managers, with almost $1.3 trillion of investments. But because it's a private partnership, the firm has been shrouded in mystery. Gene is changing that. She's also making ESG investing one of Wellington's top priorities. She says sustainability will transform the structure of financial markets.
We don't think it's woke. We think it's part of, like, a very, very important part of studying the opportunity set and the risk set of 5,000 companies.
Is that to say there's alpha in ESG or alpha in sustainability?
Yeah, absolutely.
You believe that?
I believe that.
Gene and I explore the strategies and perspectives that make Wellington different and are defining her tenure as CEO. Why she still believes in globalization and having a presence in China. The virtues and challenges of active management. What to expect from Wellington's expansion into alternatives. The value of staying private. Here's my conversation with Gene Hines.
Gene, Wellington is one of the world's largest investment firms, but relative to BlackRock, PIMCO, Fidelity, Vanguard, I could name others, of course, it's hardly known and certainly not well understood.
Yeah.
Why?
For a long history, we have had a very low public profile, so that would be number one. I would say another reason is that we are a sub-advisor, so our largest business, one of our largest businesses, to be a sub-advisor to other companies that are well-known household names, such as Vanguard and Fidelity and T. Rowe Price, for example. So we don't market directly to consumers. We are the content provider. So you combine those two, that we're not a household name, brand name, and also at the same time we had a very low public profile, is probably the reason most people don't know us.
Is having a low public profile, flying under the radar, if you like, being a little mysterious, good for business, a competitive advantage?
It probably served us well over time. I think for our current, if you look at in 2022, why am I talking to you today? I think the main reason is because we're a sub-advisor and we rely on partners, we're finding that it is important that that our brand is known for our content. I think very importantly, and maybe even more importantly, I also think it helps with talent. So it's very interesting that, you know, for years and years and years, we would try to attract talent and no one would ever know anything about us. And that served us, that was fine when we were a Boston-based company, but when we began to globalize and begin to hire investors all over the world, that didn't serve us well.
That's been a big change, hasn't it, in the asset management industry, the importance of having a brand. Most of the asset management industry has made a bet on sustainability.
Yeah.
But suddenly, ESG is under attack, right? There are state governments here in the US that are waging war on sustainable finance. They're calling it wokeism. What do you think of that?
We're not investing on sustainability from a value-based perspective. We're investing in our capabilities from a how do we research companies? How are these companies' earnings going to, what are the risks to the companies from ESG factors? What are the opportunities for companies from an ESG factor? So we don't think it's woke. We think it's part of, like, a very, very important part of studying the opportunity set and the risk set of 5,000 companies.
Is that to say there's alpha in ESG or alpha in sustainability?
Yeah, absolutely.
You believe that?
I believe that. The alpha will all be in the nuance of company research. Which companies in the life science tools industry, for example, are going to create products to help biologic manufacturing be less emitting. You're only going to be able to figure that out by meeting with 20,000 companies like we do every year.
So the antithesis, if you will, of like building a momentum model and backtesting it.
The antithesis of what the factors were in the last decade.
Almost every CEO in almost every industry grew up believing that globalization was good. And globalizing has been a priority of Wellington's for 15 years.
Yeah.
Is that still the case?
Yes, I would suspect that at the end of my tenure at Wellington, instead of having 30% of our employees in Europe and Asia, it could be closer to 40% of our employees. So we are deliberately and intentionally continuing to invest in our offices around the globe. But you're right that deglobalization we're in a period of regime change and deglobalization. I don't think that necessarily impacts our business to the extent that there is great investment talent all over the globe. Really great investment talent. We don't have a monopoly. We used to think we had a monopoly of investment talent in Boston, and that clearly wasn't the case. You know, the reason we began to globalize our investment platform is that the world was expanding the number of companies that were in Europe and Asia. And who are we to say that we're going to follow all of those from our Boston office? That was the reason we began to expand. And I think that is still true, that this is a global firm, this is a global economy, and even if there are certain trends that are deglobalizing, there is still a world there for us to either think about from a company perspective or think about from an economic perspective.
China has become and is still becoming an increasingly complex place in which to do business. How do you manage that?
So we have a presence in our Hong Kong office, and we have a small presence in our China in China through a Shanghai office. We are expanding our license to be able to invest in the onshore China. Right now it's small, but it's an important place for us to do research.
Are you already starting to do anything differently because clients are concerned about inflation, because of the impact on their portfolios of rising rates, because of the potential for a recession, however long-lived it may be?
Well, I think our clients have not made major changes. There's definitely more interest in our commodities capabilities, our inflation capabilities, our value investing capabilities, which have been out of favor. And fortunately for us, we continue to invest in those teams. But those are probably on the margin more interest than they have had in the past.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Wellington is an active manager. No indexing?
No.
No passives?
No.
How come?
That's not our core skill set. Going back to what is our core skill set? Our core skill set is being a research-based company and having these teams of portfolio managers with different skill sets that practice their philosophy and process. So we're a research-based content company generating insights about the world. That's completely opposite of passive investing.
Am I correct in saying that the implicit promise to investors in actively managed products is that they'll either get alpha, right, beat the market,
yeah,
or better risk-adjusted returns?
Yeah, I think for us that it will. I think clients are asking for both of those, right? Clients are asking for both alpha and risk-adjusted returns, and that's post the global financial crisis. Risk, the pathway of returns has become more important. But you go back to the basics. If you can generate 100 basis points of alpha, 200 basis points of alpha over indices, that is a tremendous compounding effect.
The reality, however, is that across the asset management industry, the active investment management industry, alpha is zero or sometimes negative after fees, and the returns aren't any better on a risk-adjusted basis. So if that remains the case, what is the future for active management?
We need to earn a return. We need to earn that alpha. So that's what we're trying to do. We've created an environment where we have this, and I do mean this, we have an incredible investment ecosystem. We don't have a CIO. We have this 600 person investment ecosystem that collaborates, that shares ideas, that where different perspectives, different opinions on the same subject are welcome and thrive. If we can continue to do that, and that's the input, like, can we do that? Then hopefully our output over time will generate those returns.
Private assets and alternatives are still a small piece of Wellington's $1.2 trillion in AUM. How do you grow those parts of the business when the competitors are large, established, and in many cases, excellent at what they do?
We first went into the privates business in 2014, and so our first fund, our first group of fund is now on its fourth fund. So that
was the growth equity initiative?
Yeah, so we have 4, by the end of this year, we're gonna have 4 platforms: growth equity, biotech, climate technology, and investing in diverse founders. So where else can we go? So that's the question. Like, what are our ambitions?
Yeah, where else does it make sense to have a footprint?
We have a very large public footprint in credit. So there are areas that we should play on the private side in credit. To be successful, we don't have to be, it's not about being number 1 or number 2. It's about growing that part of the business and generating great results for clients that help the overall business. The same is true on real estate. So we have a very strong structured debt capabilities as well as real estate equity capabilities. So can we attract talent to help us complement those on the public side? You know, longer term, we have one hybrid fund. You know, you could envision us having hybrid funds by sector that's like a natural extension. So we have such strong sector teams.
So those assets are what right now?
Those assets, altogether, by the end of the year, they should be $7 or $8 billion. So a small part, but still an important part of the business.
That's privates and alternatives.
Privates and alternatives are 7 to 8. The liquid alternatives, we've been in the long short business since 1994, and that business is approximately $30 billion.
Okay, so put them together and you're getting close to 40. Yes. Jean, there aren't many people in your position who started out as administrative assistants and rose to become CEO at the same company, really the only place you've ever worked.
Yes.
Tell me your story.
So I'll go back to college. So first of all, my parents were Irish immigrants. My mother raised 6 kids, and my father was a bricklayer. So I didn't know anything about the stock market. We didn't talk about stocks around the kitchen table at my house. But I would say they were very focused on education. And so I got practically a full scholarship to Wellesley College, which was an amazing experience. And as one of the classes I took, which was in my junior year, it was sociology. It was a sociology class that you had to get a job. Every college has a class you have to take. This was the class you had to take. But I just happened to get a job at a brokerage firm in Boston. And so that was my first introduction to the stock market. And I did not like the cold calling part of the business, but I was just fascinated by the stock market. And that's how I found my way to Wellington. And Wellington was just beginning to expand. They were hiring college graduates as administrative assistants.
So at what point did you start to manage money?
Yeah.
And at what point did you realize that this firm was interested in cultivating you as a leader?
So I started managing money in 1997. And so, and every year from then, I began to manage more money. In 1999, I was able to run a biotech portfolio. In 2000, I was able to run a sleeve of the Hartford Healthcare Fund. And then the decade of the 2000s was really like honing those portfolio management skills. I will say I began my leadership journey right around the time I moved to London. So I moved my family to London in 2003. 2007 and 2008 as we began to globalize our investment platform. It was really about culture. It was also becoming more independent from my cocoon here in Boston. I'm from a very large family, a big Irish family. I had my life was planned out. I had social events all the time, barbecues here. So I actually do think moving to London, being alone with my small family unit, being away from the person I worked with for 16, 17 years was the beginning of my leadership journey. And then I became managing partner in 2014.
You're still running the world's largest healthcare fund.
Yes.
How's that possible? Managing $46 billion with all the research and all the analysis that it takes to stay on top of such a complex industry, set of industries really, while also being the CEO, and while also being, I hasten to add, a mom to 4 daughters. How do you do that?
So everyone has super strengths, right? Everyone has super strengths. One of my super strengths is
your superpower.
A superpower is organization. If I wasn't as organized and sort of superpower and processes, I think it would probably be impossible.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
Hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We've talked about the virtues of being a private partnership. Have you ever wondered to yourself if Wellington would be better off as a public company?
No.
Why not?
Because I've followed public companies my whole career, and for a lot of public companies, you have to really focus on the public markets really force you to be more short-term focused, and it's more short-term focused than it was 15 or 20 years ago. And the best companies continue to operate with a long-term focus. Our private partnership just allows us to be long-term focused. The other question you would ask, what would ever make us go public? And it would probably be some dramatic change in the industry where we needed capital in a way we don't need today.
This company makes a lot of money, doesn't it?
We are in the asset management business, and if we do well and we generate alpha for our clients, it is a profitable business.
I was fishing for something a little bit different, which is along the lines of this. There aren't many publicly traded companies with assets under management in the neighborhood of Wellington's. Only a handful.
Yeah.
But they make, those with a 1 handle on the trillions make somewhere between $1 and $3 billion a year in net income. Is that ballpark for Wellington too?
You're not going to get me there, Eric. It's a nice try. All I'll say is that we participate in the asset management industry. We have a similar costs, but we're not different. We're not the same as everyone else. We don't have the cost. We are an investment management business, so we earn a fee for managing the money. We're not a heavily distribution-oriented business. All of our compensation, though, is geared towards performance. So everyone at Wellington will do better if we perform for clients, and that's the key.
How do you decide who gets paid what?
So that's the other part of our partnership. The 3 managing partners, which I've been one since 2014, distribute or determine the profit, how the profits are split at the firm. So you have to imagine there has to be tremendous trust in the 3 managing partners, and that trust means I know they trust us to know what's going on in the business, who's having impact, that we're not going to play favorites, that we're going to be really fair. The path to partnership and the ability to become a partner at Wellington is a really critical part of our ability to attract talent.
Talent has always been one of the hardest, maybe the hardest problem to solve for in the investment business. And that was true before the pandemic, right? And the demands that it has created for flexibility and the demands that it has created for diversity. How hard is the talent problem now?
I think the pandemic has shown us, and it probably should show most companies, that it's not about buildings. It's about the culture. It's about shared values. In the future, we're going to be more flexible about where our talent sits.
How much of Wellington's success in the future depends on how well you integrate technology?
I think 5 years from now, we won't have a technology department. We'll have technologists will be integrated into running the business. And I'll give you some examples. We have portfolio construction tools. We have ways to screen. Each portfolio manager has a philosophy and process, and they have a tool that helps them screen based on that philosophy and process. We have these tools now that bring very qualitative things into a quantitative framework. We have our own internal risk portal. So how do you continue to make that a greater and greater? And we've already talked about ESG and how much it's data oriented. How do you make that more and more part of the portfolio construction process? If we're in a more complex world, which I do believe we are in, a more complex investing world, where it's not just about revenues and earnings and PE, it's about this mosaic of things that are going to impact the value of a company or the value of that return, like what's the path of portfolio returns. Technology is going to play a bigger and bigger part of that.
There are a lot of asset managers.
Yeah.
Who do you think of as Wellington's main competition?
Well, I will say I've talked to quite a number of them in my new role as CEO, and I have a lot of respect for my peers. One observation would be that they're all a little bit different, right?
Sure.
They're all a little bit different. But if you look at over time, who has sort of a research process that's similar to us? Like I would say Capital Group, T. Rowe Price. I'm often in meetings with Capital and T. Rowe Price. You know, PIMCO on the fixed income side is probably a competitor that we highly respect and run into from a client perspective. Those would be a few examples. And then on the private side, it would be many small firms. And on the long short side,
name 3 things you admire at rival firms and wish Wellington could do as well.
All right. Well, this is okay. Give me a minute to think about this. I think that if you look at BlackRock, they use their technology as an advantage to interact with clients. I don't think anyone really in that way can compete with them in terms of the competition with Aladdin. I think that is just very impressive. Capital Group and their distribution in the U.S., for example, they have a very strong relationship with broker-dealers in the U.S. I think that's also very impressive. If you look at some private firms, this is not so much direct competitors, but firms that have been around for 20 years. I think it's a real advantage if you've been on the private side, if you've been around for quite a long period of time. So obviously firms like Sequoia, they're not doing exactly what we're doing, but they just have sort of this, I'm studying them quite a bit just because we're, how do we be excellent in the privates business? And there's a few of them that have just done such a good job consistently over time. That's been very impressive.
Is growing this business important to you and to your fellow partners?
We follow 5,000 companies. We're always analyzing how are companies relative to their competition and their peers. So we want to win, right? So we want to do well. I'm also a strong believer in you can't aspire to grow just for growth's sake. You have to be super focused on the inputs. And if you do really well on the inputs, you will grow as a firm. The leadership team, I think our partnership is very focused on that. Like if we have the right inputs, and that means, are we investing in talent? Are we investing in new capabilities? Are we expanding in areas that we think will help our clients? Then hopefully we will, and we can deliver performance, we will grow.
Let's talk about the legacy that you're in the process of defining. When your colleagues and your clients look back on the Gene Hines era as CEO, they'll say you accomplished what?
That we've continued to hire amazing talent. We have made our collaborative investment ecosystem stronger, and that we have been a firm that's growing, so we've been able to expand the partnership, and that we are delivering, most importantly, we're delivering great outcomes to clients. And maybe finally, it's it's more about can I do what the previous CEOs have done and figure out ways to strengthen Wellington so that we have another 40, 50 years, that the next set of CEOs can continue, that I'm just passing through and a steward of this firm, that, my almost 40 years here, whatever I retire, that I will know know that this firm will be very strong for the next 50 years.
Gene, thank you very much.
Thank you, Eric.
I really, really enjoyed our time.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Rose is a trailblazer. In 2019, she became the first woman to lead a major UK bank when she was named Chief Executive and Executive Director of NatWest Group, the place she stayed since starting her career as a graduate trainee 30 years ago.
It was always, for me, the next job was more interesting, the next challenge was more interesting.
Her current role is her most challenging yet, taking the helm of a lender that had to be bailed out by the state following the global financial crisis, and steering it through the multiple disruptions of the COVID pandemic, Brexit, and the war in Ukraine.
Yeah, I'm feeling okay about the future. I'm very conscious of, you know, the challenges that are facing people, but I think there is a lot of resilience in the banking sector and in the corporate world that can help.
As she looks ahead, she's determined to innovate, to embrace new technologies, and reform financial structures that have deepened inequalities.
Some of the work that we did around addressing some of these barriers has made a difference. We've seen a real increase in female entrepreneurs.
But she also tells me that she wants NatWest to get back to basics in serving customers.
I describe it as a relationship bank for a digital world. Actually, it's really important that you build a relationship because you can go anywhere, do anything. But it's much more convenient, and that's what banking should be.
Thank you so much for joining us on Leaders with LACWA. Now, you started as a trainee. Do you remember that first day?
Oh, gosh, yeah, absolutely. Yeah, I joined the graduate scheme, and I just remember joining with a bunch of graduates, and you did this great rotation where you tried lots of different jobs, and my abiding memory was I had no idea what I was doing. You know, banking from the outside in is really complex. And just being really nervous and not really knowing what I was going to do, and then sort of launching myself into this graduate training program, which was great fun.
And here you are as chief executive. So do you think sometimes of what kind of leader you were back then, or you thought you were back then, and what you are now?
I had no concept when I joined that I would be CEO. I was, you know, it was all about trying to learn. I really thought I'd be in banking for 2 to 3 years and then go and do something else. So, you know, I think the great thing of being a graduate and going through an organization in any career, you get to see different types of leaders. And so as you develop your own leadership style, you sort of borrow from other people, and then you find yourself. I mean, that's the whole thing about as you start a job, you kind of learn about yourself as you go and acquire different skills. So I had no idea at that point or view that I would become the CEO.
But so what made you stay?
It was always, for me, the next job was more interesting. The next challenge was more interesting. So you know, my HR team always, you know, hold their head in their hands sometimes when I say I didn't have a 5-year plan or a 10-year plan. It was what was the next most interesting job, and it was always an interesting challenge, and it was always with great people. And I think those are 2 really important ingredients in any career or any firm. Work with great people, work with great teams, have jobs that challenge you.
What's your biggest challenge right now when you look at how you lead the team? Is it motivating people? Is it keeping the workforce on side? Or is it actually, you know, strategy and shareholders?
Yeah, I mean, all of the above, right? And I think being the CEO of any organization today, you're having to balance all of the needs of your stakeholders. I mean, I've deliberately set my strategy of being a purpose-led strategy, and it is about keeping my customers happy, my communities happy, my shareholders happy, all of my stakeholders happy. But I think the biggest challenge of any CEO or any leader right now is the world is so uncertain and moving so quickly. So you have to be able to lead through ambiguity and with authenticity. And of course, what most people want is, tell me what the answer is. And that's what we're all having to explore.
You've been chief executive for just over 2.5 years, and at the time it was really, you know, focusing on the environment, focusing on ESG. We've had COVID since. Now we have a war at the, you know, the footsteps of Europe. How has that changed you as chief executive?
I think it's meant that I've had to be much more hands-on. I was always, you know, quite hands-on anyway, but I think when I took over as CEO, when I spoke to the team, I talked about creating a learning organization and how the world was changing so fast and it was very unpredictable, and we had to stay really close to our customers and be able to work with them and build a tight relationship. That's never been more important than through the pandemic or through this horrible situation we have with the invasion of Ukraine. So I think what it's really centered for me the importance of, you know, clear leadership, clear direction, but also understanding, the balance that people have in their lives. And for me, leading, banking is a service-led organization. Stay close to your customers, support them through their lives, and make sure you drive a very clear path for your colleagues.
Do you think the reputation of banks has really changed in the last 10 years, or is it frustrating that, sometimes clients, customers see you as the app instead of understanding exactly what you're trying to achieve?
Yeah, it's always hard to get over, what a bank does and what it is. We provide, the fuel to the economy that creates jobs. We provide huge amounts of support to communities and big education programs, and we, provide banking. But banking is almost seen as a utility rather than a service, and so we're always balancing those. And I think, since the global financial crisis, banks lost trust. It takes a long time to rebuild that. So you have to do that customer by customer. But I think the reputation of banks is improving. I think we stood up during the pandemic and we were there to support customers, and we're part of helping keeping the economy going. And hopefully the value of the banking sector became clearer.
The government now owns less than 50% of NatWest. How did that feel on that day?
It was a good milestone. It was a really important milestone, especially for colleagues. When I took over, the government held 64%. They've been a great shareholder, but getting below 50%, no longer majority owned, is just, a testament that we're delivering the right strategy and delivering value. But I think for a lot of colleagues, it was a milestone moment. Day to day made no difference. I think we had a gentle nod to say excellent, and then on with the job. There's still 48% to go.
Coming up, Allison Rose tells me she believes the UK economy is making a strong recovery from the pandemic. But NatWest customers are still adjusting.
With rising interest rates, with inflation, those are things that, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it is causing quite a lot of anxiety.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Allison Rose has spent her entire career in finance and NatWest, starting as a graduate trainee straight out of Durham University 30 years ago. She became chief executive in 2019. Now, as the UK recovers from the pandemic, she's been taking the temperature of the bank's customer base as inflation, rising fuel prices, and conflict in Ukraine cloud the economic outlook. We discuss what she's observing on the ground.
We overlook, St. Paul's and the City of London. You're so intricately, intimately linked to also the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Do you feel more stress than at the beginning of COVID? It's very different. I mean, some customers will be able to pass on, of course, some of this inflation onwards, but then you'll have, a lot of families going through quite a lot.
Yeah, it's very different, and I think it's the experience is very different everywhere. At the moment, we're not seeing signs of stress in what we would see in our data around distress or loans or people asking for requests for help. So it's mainly concerns. But with fuel price rising, for the lower income families, it is quite distressing. At the other end of the scale, you've got a huge amount of liquidity sitting in the economy, on corporate balance sheets, in businesses, from all the quantitative easing that's been done. So you've got a number of things, pulling against each other, which makes it very complex. So I think it's really an important time actually for banks, again, to be really important, because we can provide practical help and support to people.
So what kind of questions do you get?
I mean, it varies. We get a lot of questions from business owners about how they manage disruption to supply chain, how they can fund their working capital, how they can restructure their pricing mechanisms for families. It's how can they save money, in terms of the money they're spending to afford the increase in fuel prices that are coming. And we do something called a financial health check, where invariably we can save people money by bringing their finances together. So it's that proactive conversation.
What about mortgages? What are you seeing in mortgages? And if mortgages go up, do you worry about some kind of credit crunch or people not being able to pay that?
Well, mortgages are, again, this is a sort of counterfactual. The mortgage market continues to remain very strong. Demand for mortgages remains very strong. And for us, the majority of our mortgages are on fixed rate mortgages. So the interest rate rises are not causing an immediate problem. Same with businesses, actually. 50% of our small businesses are on fixed rate borrowing. So you're not getting increases coming through.
For now, but then in 1 or 2 years, I guess that stops, right?
Yeah, I mean, I think as you come off the fixed rate, what will the rates be at that point? I think it's about helping people plan and think ahead. What is going to happen in 2 years' time? Where will inflation be? The Bank of England are putting through interest rate rises to try and bring inflation down. The invasion of Ukraine and the disruption to the geopolitical environment is causing stress. So I think it's calm heads are needed right now to navigate what is uncertainty, and making sure that businesses and families have got the right support.
Worst case scenario, could you see zombie companies or companies going under? Or because we've had that support during COVID, we seem to be a bit more resilient to what's coming?
I think there's a lot more resilience. I mean, what is astounding, if you look at how businesses in the UK performed during COVID, I don't think anyone would have predicted they would have been so resilient. And yes, there was a lot of support put in place to do that. But businesses did think about what was their supply chain like. They did think about innovation and technology. They did think about how they managed their workforce in a different way. So there is a lot of resilience.
So does it mean you're feeling okay about the future?
Yeah, I'm feeling okay about the future. I'm very conscious of the challenges that are facing people, but I think there is a lot of resilience in the banking sector and in the corporate world that can help. There is a bit of a buffer there that can support. So I think we just need to navigate that, and hopefully inflation will settle down. I do think things are exacerbated right now because of the invasion of Ukraine and what that's doing to supply chains and the geopolitical impacts. But I think it's just really important to try and give good advice, sensible advice, and plan sensibly.
So when you travel across the country, it's also extremely interesting to hear your thoughts on, of course, some of these regions and how different they are. We talk a lot about leveling up. Has it worked out in the UK?
Yeah, well, I mean, we as a bank are a really regional bank. Most of our business is outside of London. And one of the things I would say is the economies outside of London are very different. You know, there are different concentrations. We've seen great growth, for example, in technology in the north. You know, we have huge teams in Manchester where there's a real hub of technology and innovation. We have innovation and accelerator hubs up and down the country. And so you are seeing different growth, but there are different communities that need a bit more support and a bit more levelling up. And actually the green agenda, the climate agenda is a real opportunity to create that because it's going to contribute to new jobs, more jobs. Actually, the flexibility created from the pandemic, working from home, means you can create and hire people around the country. So I think there's a real opportunity, but I think it's really important that everybody recognises the different economies and the different trends that are.
Why is it still so difficult for women entrepreneurs to find funding?
Yeah, I mean, it's a complex question, and it's really frustrating because there are so many female entrepreneurs in the UK. Lots of reasons. Lack of access and awareness of financing is definitely one. A very shockingly small amount of VC money goes to female entrepreneurs. It's only 1%. We think it's gone up to 5% as a result of, but that's still shocking. It's shocking, and it's mainly investment teams are all male. They'd say they're not seeing the pipeline, but we're seeing amazing entrepreneurs. Some of the work that we did around addressing some of these barriers has made a difference. We've seen a real increase in female entrepreneurs. The number of businesses opened and run by women last year went up by 33%. So 156,000 new businesses opened by women. And really excitingly, the biggest growth area was in the 16 to 24-year-old age group. But it's still too hard because it's geared to perceptions of what a business leader should be, what an entrepreneur needs to be successful, and yet you have this amazing group of female entrepreneurs. So it's moving, but not fast enough.
Does it change the working from home because of the pandemic? Does it help or actually hinder women?
Well, I think in the short term it hindered because what we saw, unfortunately, is one of the big barriers to female entrepreneurs is family care responsibilities disproportionately fall on their shoulders. And during the pandemic, with working from home, that became exacerbated. And we found that 70% of female entrepreneurs found running their business in the pandemic more stressful than men. It was only 55%. And for women, they had to take 6 out of 10 days for caring responsibilities versus men, 1 out of 10. So it made it worse. However, the fact that networking could be delivered digitally online and it wasn't in a very old traditional way, the fact that you could bring teams together and work remotely is definitely an advantage. So as we come out of the pandemic with those family care responsibilities diminished, then I think the digital and technology will help, which is why we've seen this big increase and more direct, practical help for female entrepreneurs.
Did you feel any of those pressures during the pandemic?
Yeah, I mean, I was running a bank from my office at home, and both my children were at home and not at school. My daughter was going through her A-levels. My son was doing online learning. So, it's definitely a challenge. My husband was brilliant. We shared it, but it is a different dimension of stress that you feel.
Coming up, Allison Rose talks fintech, crypto, and explains why banks have to focus on relationships to stay relevant in a rapidly changing world.
Banks have no reason to exist unless our customers want us to exist. We provide capital and fuel to the economy, but we need to make sure we're serving them and working with them.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon, Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As the first woman to head a major UK bank, Allison Rose is a living example of one way that finance is changing and evolving in the 21st century. The industry is also transforming through technology, with physical branches increasingly giving way to digital interactions. We discussed what this shift means to the business of banking.
How has the relationship between a customer and the banker actually changed? I remember like 15, 20 years ago, people would go into branches and have this like personal relationship. Now you're spending so much money on the app because a lot of people don't need to speak to someone. Yeah. So how do you reconcile the two?
Yeah, I mean, banking's changed massively. I mean, what I'm trying to do with my strategy for the bank is I describe it as a relationship bank for a digital world, because it is a relationship. You have to have a relationship, but a relationship can be delivered in a very different way. For example, NatWest now, 60% of our retail customers only deal with us digitally. We are a digital bank. Yeah. 90% of their transactions can be done digitally and online. So the way banking happens is changing. The mobile app, video banking. Now, that before the pandemic, we do 100 a week. We're now doing 16 to 17,000, and it's much more convenient. So I think it is the sign of how technology is evolving, how customer behavior is evolving, and it is much more interactive. So actually, it's really important that you build a relationship, because you can go anywhere, do anything, but it's much more convenient, and that's what banking should be.
How do you measure success? Is it a customer that will have every product with you? The number of products or a number of good reviews?
It varies. I mean, we measure it through NPS, so that we make sure, which is our customer satisfaction scores. We measure it through meeting the needs of our customers through their life cycle. So it's great that we have grown our market share with youth customers up to almost 16% now. But what success for me will be in 20 years' time, those young customers will be existing customers of the bank, and we'll be helping them with their house, we'll be helping them invest for the future, we'll be doing all the things that really matter. So we look at it as part of our purpose strategy to build long-term value, so our customers stay with us and grow with us.
Any M&A on the horizon? I mean, there's always rumors flying around that you're either buying someone big or you're being bought.
Yeah. No, I mean, one of the advantages I have now with the bank is, we have, lots of capital. We've got a capital generative business. We're investing $3 billion. We're paying very substantial dividends, and we have capital to invest in M&A if there are compelling reasons. But for me, there's got to be really I would like to acquire, because we're on a path of a great transformation plan. Things that we're building ourselves, partnering is a really important aspect of what I want to do. So I will look at M&A, but only if it makes really strong, compelling sense for shareholders.
How do you see the banking sector actually changing in the UK in the next 5 years?
Yeah, look, I think we've got to be, it's much more open architecture. Technology and data is really transforming not just how customers work, but how we work. And I am a great believer in bringing partners in. I'm building a real partnership strategy, because doesn't always make sense for me to build it myself. And also, I think the definition of place is changing. You can't rely on customers to come to you. Our customers are, in the metaverse. They're, in TikTok. They're somewhere else. So we've got to build the relationship and go where they are. So I think partnership, technology, data are all going to be part of it. But we're an intrinsic part of people's lives, and that's a very privileged place to be. We just need to make sure we stay there.
In the metaverse, is it to have a presence? Is it actually attracting customers in the metaverse?
Not yet, but I think, clearly the boundaries between the virtual world and the real world are very different. And a lot of, a lot of our younger customers move very effortlessly between different places. So we need to make sure we stay relevant. I mean, banks have no reason to exist unless our customers want us to exist. We provide capital and fuel to the economy, but we need to make sure we're serving them and working with them.
What does it mean for crypto and fraud?
Yeah, I mean, crypto is a real challenge. It's a new technology, but it's also, we're seeing very significant amounts of fraud coming through that. And fraud generally in the UK is, we've talked about it being almost, pandemic proportions, because people are, being defrauded constantly. I mean, last year we stopped over 355 million of fraud against our customers. I mean,
online?
It is through a mixture of online, through romance scandals, through very simple impersonation scandals. And so making sure we can protect our customers and inform and educate them is really important. And crypto is a new innovation, a new technology, a new currency, still developing, but there are quite a lot, and there has been a high proportion of investment frauds using crypto. So we're working really hard to develop defenses against that to keep people safe.
Rapid fire questions. Okay. Best piece of advice?
Don't sweat the small stuff.
The worst piece of advice you've ever been given?
Worst piece, try and be like someone else.
What would you tell your 20-year-old self?
Go for it and believe in yourself, and just be yourself.
Who's someone that you admire?
My late father.
Because?
He was high integrity, very courageous, and believed in me, and was a good man.
What does it mean being an entrepreneur in the UK in 2022?
Being an entrepreneur is taking a risk and having all of the opportunity. This is the most entrepreneurial country there is, and the opportunity to start a business and grow and thrive is really exciting. But it's about having an idea and going for it.
You're so good. I have like 25 other rapid fire questions. Where's Allison Rose in 5 years from now?
Doing something I love.
Which is?
Whatever the next challenge is.
Allison, for the next 12 months, what's your biggest priority?
To help people, families, and business navigate the uncertainty ahead.
Thank you so much for your time today.
Thank you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.